Thank you so much for doing this.
Oh, thank you so much for having me.
You spend a lot of time in Abu Dhabi these days.
Yeah.
How come?
Abu Dhabi's a Renaissance state. I started to come about 35 years ago, so I developed great relationships, work and personal relationships. And I got to know the culture and so on. But in the world today, there are bright spots. There are the places where they're earning more than they're spending. They have good income statements and balance sheets. They have a culture in which there's excellent education for most people. There's civility, and then
good
there's
weather.
Productivity. The weather is an issue, but it's it's like Miami or someplace. But I mean, it's so in this world, changing world order, which we're going to talk about, the GCC states have to be paid attention to. I mean, they are the Renaissance states, as well as Singapore, for example. What Singapore represents for the same reason in the Far East. Singapore is a hub for that region, which is a hot region. So the world is changing, and this is one of the places here, Saudi.
And you open an office here.
Yeah.
Yeah.
Family office.
Family office, do you have those in multiple locations, or is this?
Here in Singapore, and then, of course, the States.
Yeah. Interesting. So your analysis of economic historical events is based on 5 forces. And I'd really like to start this conversation by getting you to just quickly summarize those 5 forces.
Okay. Just to give you a little bit of background, I'm a global macro investor. And what I learned through my experiences is some of the times that I was surprised is because things didn't happen in my lifetime, but I found out they happened in the past in history. So the 3 big forces that really drew me attention to studying the rises and declines of reserve currencies and empires were, first, the amount of debt creation and the amount of money creation, and the whole impact of debt and money on the economy. The magnitudes are unprecedented, except you have to go back to the 30 to 45 period, and happened many times in history. The second is the amount of internal conflict, particularly the development of populism on both extreme, due to the largest wealth and values gaps that we have. And a populist is an individual who will fight and win at all cost, including the system. So I never saw that before, and I needed to go back. I knew it existed in the 30 to 45 period, needed to go back and study it. The third force, of course, is the great power conflict internationally. You know, we had our world order began in 1945 at the end of World War II. Then there's a new way of doing things. The United States was the dominant world power, had 50% of world GDP, 80% of the world's money, gold was money then, and had a monopoly. So they determined how things would go pretty much. And then, of course, now we have the great power conflicts and so on. So those 3 things, last time they happened, 1930 to 45 period, I wanted to go study them in the past. In doing that study over the last 500 years, I have a fabulous research team that can do this. In doing it over the 500 years, I saw that 2 other things popped. Maybe more important, or comparably important, was acts of nature, droughts, floods, and pandemics. So climate became a big issue. And of course, climate is a big force of our time because no matter what is done or not done, it's going to be very costly. So it's certainly an economic issue. And then number 5 was technology, the changes in technology. So those 5 forces I saw, and I realized how they interrelate with each other to create this big arc. And so it's like watching the movie happen over the same time over and over again.
And it's a great framework for looking at history. I want to try and hit all 5 of them here in this conversation because we've been talking about all 5 of them in various forms over the last 2 days. But let's start with the money debt economic cycle. We had this extended period of what you've called insanely low interest rates. followed by a massive wealth transfer that happened during the pandemic. Where does that leave us when you look at the economy over the next couple of years with the buildup in debt, with interest rates returning to normal? What does the economy look like?
Yes, I like to explain when I answer questions like that, I like to explain the mechanics of how it works so that we understand.
As long as we can do it within the time.
And
yeah.
I'll try to be as quick as I can. One man's debts are another man's assets. That means interest rates have got to be high enough that they're a good return for the creditor without being so high that they're bad for the debtor. And so you see these swings and cycles in which it's great for one time for the debtor and vice versa. So we went into an insanely free money environment in which interest rates were nil and real interest rates, bond yields, went to minus 1.7%. Okay, so which side is it good for? Okay,
yeah.
Okay. And then we go through this other swing, an insane swing. All through this, we've increased our debt to GDP. What we did is we particularly transferred, the government got into a lot of debt, and the government then wrote so that they could write a lot of checks for a lot of things, okay? So what happens is, as debts rise relative to incomes that are supposed to support the debt, it becomes a more and more difficult balance. So we've reached the point, we are reaching the point in a classic debt cycle, you reach the point that you have to borrow to service your debt. You know, like the different countries, Singapore is a good example, 20% of their expenditures, for the government expenditures, come from what they earn in the financial part of their balance sheet.
Right.
Well, there's the other side of that of what you
having to pay debt.
Okay, and then there's that acceleration. So we're very close to that acceleration in which it becomes compounded. And there's I won't spend too much time, but the classic signs are when the central banks lose a lot of money. So what happened is they bought all the bonds because there was a supply-demand imbalance.
Yeah.
In other words, there were not enough buyers.
Yeah.
So they came in and bought on. So
Yeah.
they messed up the market, the free market, to keep rates there.
Yeah.
And now they're owning all the bonds. Banks bought all the bonds. Japanese bought bonds. Everybody bought bonds. They have a lot of bonds. They're losing money on the bonds. Everybody's, okay, go
So
ahead.
you've watched this cycle over 500 years. What does that mean for the next year or two?
Well, what it means, is that all markets are driven off of the Treasury market.
Yeah.
All credit markets, all equity markets, everything is priced off of that curve. So now we'll go back to basics of that. What is the inflation rate going to be, estimated inflation rate? And people have their different guesses. Probably between 3% and 4%, okay? Somewhere in let's call it 3.5, whatever the number is. You're going to need a real interest rate that's going to be in the vicinity of 1.5 or 2%. You can't go back to the other, otherwise they haven't.
So now you're talking 5.5.
So you're talking in that order of neighborhood, 5.5. There's nothing precise about that. And so now you have an interest rate that is in that vicinity if you have a normal supply-demand issue. We may have a supply-demand imbalance. We're going to be dealing with that because there will be a lot, still big deficits. The world needs big spending. There's going to be big spending. And that means you have to sell bonds. And the world is overloaded in bonds. And so we have that dynamic. So I don't believe that you're going to see any material interest rate decline. A lot is being made of the blip down. Interest rates went from, the bond yield went from 1.7% to 5%, and has then come down to 4.5-ish, and so on. But so that is where the bond. Now, when you're looking at, let's say, equity markets, and they could be private or public equity markets, and you're looking at the premium that they usually should have above that, you don't have much premium above that. At the same time, you're having this technological changes that are big technological changes. And so the question has to do with, what their impact is on earnings and so on.
So it's sort of, do the negative economic effects outweigh the positive technology effects?
Yeah, you have to look at company by company and industry by industry, and also geography by geography, because there's such a bias to talk about the American markets.
Yeah.
Okay?
I'm going to come back to technology, but let's do politics quickly. We have an election next year in the U.S. that you've said is the most important election in our lifetime. You see populists on both sides of the debate. What's the end result there?
Well, I think we can all see that we have irreconcilable differences by sides that will, if that's what I mean by populism, irreconcilable difference by sides that will not accept losing. And so you're seeing an emergence, even an emergence of should the Supreme Court matter, and do you put people in jail, and all of this kind of extremism. So one side can't beat the other, and no good government, no good society exists with this kind of fighting, and this is not good governance. This has big implications. It has big economic and tax implications and money implications. Who do you get the money for? So this is something that people will fight over in their various ways if it's not resolved. What we need is a very strong middle.
You see any chance of that?
Well, there are two scenarios that I have. I pray that we do not have another Trump-Biden election, okay, because that'll produce a lot of problems. Now the question is whether on the Republican side there's going to be an alternative candidate, and the game plan is for that alternative candidate, the Republican game plan, is to have whoever's the number one contender be the only contender, so others will drop out. They're going to be first the Iowa caucuses, New Hampshire, and then there's going to be...
So there's a little bubble of Nikki Haley interest.
So Nikki Haley is the leading candidate. And from my point of view, as in terms of is she smart? Can she work across party lines? Does she have quality of character and all of those elements? She's, in my opinion, she's good for the system. I want both sides to have.
Yeah. What happens on the other side?
Well, the other side, there are. The question is whether Biden runs a combination of his age issue, his popularity, and so on are a problem, so that if Nikki Haley should get the nomination, she would be the probable winner in a presidential election. Almost everybody would say that. And that would put added pressure on the Democrats, because also everybody's thinking about who is the successor, and Kamala Harris is not popular.
So if Nikki Haley gets it, then they'll have to think about a different candidate.
So we're now entering a different dynamic, and the question is, do we change and beneath the surface, there are people who are very effective working, moderate people, practical people, because we're also going to need reforms. Okay, we have to reform the system in a lot of ways to make sure it's great for most people, and that's a whole other subject.
I'd love to have that conversation with you sometime, because it's absolutely critical. But it sounds like you think there's at least a chance that we don't end up with a Trump-Biden election.
Yeah, the interesting election, the interesting race is going to begin really probably around South Carolina, after that, right around that point, between the alternative and Trump.
Yeah, something to watch. Geopolitics. We've got a war in Europe. We have a war here in the Middle East. We've got tension in China. I saw you said recently that you think the chances of war in Asia have gone down.
Yeah, I've been going to China since 1984, and they didn't have money, but I didn't go for money. I went for these curiosity at first, and then the relationships, and I've been involved all the way through that. And when I went there last March, we were really on the brink of war, irreconcilable differences. And certain things have happened since then, that the fear of that, the devastation that could be if you had a bad economic war, sanctions getting past a certain point and the like, would be devastating on the world economy. That became real. And then the issue of military war became, so they couldn't even talk.
Yeah.
And that lent itself to stepping back. And so it was in preparation for the APAC agreement that a lot of work was done and things were done. So there's a stepping back from that kind of war. There was more like a Chinese war, the nonviolent war, that is the war behind it, you know, like The Art of War. The book of The Art of War describes it well, but it's through their history. They basically believe that if you go to a military war, you weren't smart enough to win without going to a military war. And so it's the conflict is more like an intense competition.
Yeah.
Okay. A no rules kind of intense competition.
So one thing that's emerged in recent days is that the U.S. government is telling investors, maybe you, certainly some sovereign wealth funds, that when it comes to investing in high-end technology, you got to choose. You can do the U.S., or you can do the West, you can do China, you can't do both. What do you think about that?
That's real. Okay.
You feel it.
It's a fact.
It's a fact. Is that a good policy in global power dynamics?
It's part of the policy of this new type of competition. The United States is exerting its various powers in that sort of way. And this, by the way, was very similar to prior to World War II. We embargoed oil. We prevented oil from going to Japan before, and we froze their assets. In the United States, as there's the thinking, chips are like oil. So as there's that competition, that's certainly the case. It's a reality. It's that kind of struggle. And then there was a worry, would you get sanctions on the bonds that they own and so on. So it's that kind of war that
not going away.
No, the technology war isn't going away, and how far it passes will be constant tension in terms of the negotiation. But I think that there's been an important stepping back from the worst kind of war.
Yeah. I want to jump to force number 5, technology, because we've spent a lot of time over the last 2 days in this room talking about really some pretty remarkable effects that AI in particular is having on how companies are thinking about their path forward. As an investor, how significant, and as an economic historian, how significant is this technology?
Oh, I think it's hugely significant, and I'm not just starting on it. I found, like 25 years ago, I started writing down my principles in words, and then they became encoded in algorithms. We built systems, computerized decision-making systems, and there was a great power, and I've watched the whole arc of this, and I know the power. It is stupid. It is archaic for people to think that decision-making just in their heads is going to be good. There has to be a partnership between what's in your heads and what the computer does, because it's so much powerful in so many other ways. So I think it's part of the whole evolutionary process. You know, it wasn't that long ago in a historical sense that we were in the agricultural area, and people were like oxen. That was their whole purpose. They would dig. And then our physical was replaced.
Yeah.
We had the Industrial Revolution. Well, basically, higher and higher, and our intellects are being. Now, it's going to take a partnership between those two things, in my opinion, to create this great leap forward. Then in terms of investing, you think, okay, where do you invest? There's a temptation to invest in those companies that are making the technologies, which is understandable. But the biggest effect are going to be on those who use it well, right? They're the ones who are going to create the transformations, probably, that I would assume almost all of the people here in the room are knowing about or getting exposure.
And so if you look at the economy over the next 2-3 years, and you look at the positive effects of technology, the negative effects of the debt buildup, which is going to win out? Are you optimistic, pessimistic?
The whole thing of all of these together is all dependent on how we are with each other. Are we going to create rules? Are we going to fight over the money? Are we going to fight over the values?
You're saying leadership.
And the people.
Yeah.
The people select who we choose. That's why I come back to this basic notion that you need to be in it together. You need to be civil.
Yeah.
Then, if we look at the places, you started with the question of
Yeah.
Abu Dhabi, and I refer to Singapore. And so when I look back at this global setting, I'm looking at, okay, what are the places that are financially sound and work well together, raise their kids to be civil and all of that.
Yeah.
It will, again, don't use too much a U.S.-based
Yeah.
focus that sometimes Americans can make the mistake
Fair enough.
of thinking about the we is the United States rather than realizing that we is very different we's around the world.
Ray, we're out of time, and my production team is going to kill me for this. They're waiting in the wings to throttle me, but I have to ask you about this new book that's out by the New York Times reporter, Rob Copeland, that's pretty critical of the way you ran Bridgewater.
It's so interesting to me because, you see these books come along, everybody's seen them. Okay, so meaning the salacious kind of book, the gossip, gotcha kind of book come along. So this is my first going through it. It is, what the tragedy of it is, as an observer of this, is that it is fiction created as fact. There's a problem.
This is a New York Times reporter you're talking about.
That's right. In other words, okay, I'll give you facts. Here's the facts. I don't know, 10, 12 years ago or so, he came to ask for a job at Bridgewater. We rejected him. So he didn't get a job at Bridgewater. Then he went to the Wall Street Journal and he became a writer. And he would make up stuff. He would exaggerate. He would speak to old employees who were typically dismissed or so, and he would get threads of things, and then he would make it up. Now, so it's interesting for me to observe how the system works. So I don't know whether you know, but I guess you do know, that in the name of journalistic freedom, reporters can actually make up things and lie intentionally, proving intentional in the United States. It's a different rule than in Canada, the UK. Let me just finish this point. So the fact checker went through it, and there were over 400 cases in which it was made up. And then in the book, he puts explanations in the ends of the book. He puts little notes that, let's say, he would make up a conversation between two people, and there are only two people in the room, and both of them said that conversation never happened. He would make it up, and he would make up the dialogue. Now, what's interesting, forget about my case. My case is trivial. It goes, people know me, they don't know me. It's not important. What is interesting is the system. When truth gets mixed with fiction by journalists, the country has a problem. So I put aside my case and talk about the problem of truth.
That is a conversation I would love to engage you in, but not today.
Not today.
Ray, thank you for giving us that tour of the world.